addiction. This is a word that makes the fat cat politicians and tech overlords everywhere shudder. They spent decades positioning themselves to take advantage of us and to control us. But a revolution is possible. And who would have ever thought that Reddit and TikTok would be the ignition switch? I want to tell you today about the tools at our disposal that can act as the kill switch to government control, tech overreach, and big finance. Let's get it. BitSwap is the hottest new way to trade tokens. Crawling all the top decentralized exchanges, BitSwap gets you the very best price and value for your trades. BitSwap is changing the game. Try it now at bitswapdex.io. Welcome to BitBoy Crypto. My name is Ben. Every day on this channel, I show you how to make money in cryptocurrency. If you like money in crypto, then make sure to subscribe and smash the like button so YouTube knows you're into things like Dogecoin or revolutions and not into censorship. Okay? And if you're new to crypto and came from somewhere like TikTok, then make sure to follow me on Twitter, Instagram, and for my boomers, Facebook. Yes, I do know that I'm a boomer. Now, in this video, we're going to be getting into what is happening with GameStop, AMC, Nokia, and now Dogecoin. How this relates to a lot of the problems that cryptocurrency solves. Now, if you've been absolutely pissed at the government's slow movement toward giving you a stimulus check, then you must be livid to see how fast this GME investigation is unfolding. Amazing when politicians in Washington can whip themselves into a frenzy when their friends are losing money. But when the American people get the screws turned to them, they just turn a blind eye. But make no mistake, in the current system, the billionaires win. People like Jeff Bezos and other billionaires added almost $2 trillion to their pockets during the pandemic. Meanwhile, the economy as a whole suffered $3 to $4 trillion. More than 50% of that money missing was stuffed into the pockets of the elite. And all you got was a horrible government check. And if you're new to this channel, you have to understand stimulus is such a horrible idea. I know people out there need money, but what you're getting with a stimulus check of $600 to $1,400 per person is a fancy bribe. That's it. But it's actually much worse than a bribe because with each dollar you receive in stimulus money, it's one more dollar the government has to print. They printed so many dollars over the last year that the dollar index, aka how much our dollar is worth compared to other world currencies, dropped well over 10%, and many people anticipate that going to 20% this year. That means that while you're taking in $600, you lose over $60 of it before it even hits your pocket. And this inflation means that even if you work at Mickey D's and you get a raise to $15 per hour, you can't buy as much as you could before the raise because of inflation. But here's where it gets even trickier. Now at $15 per hour, you move into a higher tax bracket, meaning the government is going to get even more of that money back from you. You gotta love the people in the shadows running this government. But thanks to Reddit and its subreddit, Wall Street Bets, normal retail investors everywhere, that's new investors, have realized that there's a way to increase your wealth with investing in stocks. If people join together and decide to buy a stock, the price will go up. And it did. Investors everywhere piled in on dying stocks that are being pushed down by short sellers in the market. Hedge funds shorting the markets were wrecked when tons of retail investors banded together to pump instead of dump what most analysts consider to be dying companies. GameStop, AMC Theaters, and Nokia. The people for now defeated the hedge funds. One company, Melvin Capital, needed a $2.75 billion bailout, like WTF. These hedge funds need to get wrecked. Everyone in the stock world is up in arms because some Reddit meme bros were able to plunge $10 billion off the market from liquidated short-selling hedge funds. President Biden and the SEC are claiming manipulation. Like, can we think about short selling for a minute in general? Are we going to sit here and pretend that billions of dollars betting that certain companies are going to close has a zero effect on the companies themselves closing? The charade of money and markets. Here's the thing. These types of illusions are supposed to be kept only for the magicians themselves. What we have been able to do over the last few weeks, especially this week, is peek behind the curtain, see how these markets perform the tricks that they do. It's all manipulation. Just wait until we talk about derivatives in a video soon where you see the vast majority of money in the world is literally not real. Like, you know that scene in Dumb and Dumber when Jim Carrey dumps all the IOUs out of the briefcase that was supposed to be filled with $1 million?
What is this? What is this? Where's all the money?
That's as good as money, sir. Those are IOUs.
That's literally the same thing going on in the world on a daily basis. Derivatives are IOUs, and they outweigh corporations, crypto, gold stocks, and even dwarf real estate. And yet, no one talks about how much of a scam this is. Now, we like to leverage trade on this channel. We take advantage of being able to bet on margin with trades. If that interests you, you can check out Bybit by visiting bitboycrypto.com/deals. But we do it because we're just taking advantage of the little bit of the financial markets that have been offered to us. In reality, margin and derivatives shouldn't even exist. It's an overly complex system that is meant to confuse you. That way, only the elite and the rich can benefit off of it. Short selling is a way for the highest level of investors to be able to manipulate the market, period. As Dave Portnoy from Barstool Sports said on TikTok yesterday, Wall Street doesn't like it when the rabbit has the Wall Street does this to us, but can't take their own medicine. What a bunch of pussies. We've seen censorship all across the internet over the last several months. Just remember, if they haven't come for you yet, they will. The angry mob mentality and cancel culture rampant in our society quickly turns on people. A few months ago, 16-year-old Charli D'Amelio was the biggest and most loved star on TikTok. People pushed her all the way to over 100 million followers. Today, I came across an ad that featured her on TikTok, and literally every comment I read out of probably 100 was about how much everyone hates her and would refuse to buy the product just because she was in the ad. The point is, life comes at you quick. Censorship in Big Brother doesn't stop when it's allowed to flourish. Same people celebrating the removal of certain ideas or accounts today will be next on the government hit list tomorrow. I'm going to have a big video specifically on censorship and decentralized social media coming soon. But what we're seeing right now is financial censorship. Wall Street is crying so much about GameStop that the SEC is looking into its volatility. That's a good way for the SEC to say they're pissed because the wrong side is winning. Even the president is now saying his administration will watch GameStop. I cannot with these people. I thought this guy was for the people, am I right? A lifelong politician for the people? What a joke. He's watching this because he's for his donors. He is for lobbyists. He is for the elites. He's for Wall Street. Wake up, people. The acting chair of the SEC said they are working to assess the situation and review the activities of regulated entities, financial intermediaries, and other market participants. Let me tell you what this means. First, this means they're watching social media. The Wall Street Bet subreddit and Discord were removed at least temporarily for hate speech. I'm not sure if they've been reopened at this point because I'm seeing mixed information, but this is the equivalent to the FBI going after the mafia on tax evasion charges. Tax evasion is just an excuse to prosecute. There was no hate speech. But secondly, the SEC is watching Robinhood. This is where a lot of people are investing in GME, AMC, and Nokia. This is the financial intermediary in the SEC quote that they're talking about. There are reports that possibly the SEC is going to step in and make it harder, not easier, for people to invest, because groups of retail investors may invest in a company that many people believe should close. So it's okay to short the stock on margin, but not invest in shares of a company. The chickens that Wall Street has been betting on for years coming home to roost. So what can you do about this? Buy crypto, buy Dogecoin. Now the subreddit Satoshi Bets has turned its eye toward Dogecoin, and some may call it a pump and dump. But this is a financial protest. I bought some today. Buy things that the government cannot take away from you. You see, while the government could shut down Robinhood to protect its precious donors and lobbyists, they can't ever take away your ability to buy crypto. Yes, they could shut down exchanges just like they can shut down Robinhood. But we have these beautiful things called decentralized exchanges, where we can trade peer-to-peer without anyone getting in the way. And for many of these sites, there's absolutely nothing the government can do. You see, the way the government shuts down sites is the same thing we recently saw in the political social media space. They work with the domain and hosting providers to take over the site. The FBI takes it over and shuts it down via what is called ICANN. It's basically the internet police. But now we actually have something called unstoppable domains. These domains cannot be taken from you. They're decentralized. If you want to get one of these domains, we will have some details on bitboycrypto.com/deals today. But the point is, people are wising up to what is happening around us. Big Brother is rampant. Financial and social censorship, it's not going to fly anymore. The internet has too much free and open information for people to be kept in the dark anymore. Now that a flashlight has been shown on Wall Street, I doubt they will be able to move back into the shadows again. And that's a good thing. But let me know what you think about all this craziness going on. Are you buying Dogecoin or any of these stocks? Let me know down below. And be on the lookout for our decentralized social media video out probably next week. That's all I got. Be blessed. Way out.
Not bad.
Wow, what a few days we have had in crypto and on the stock market. Dogecoin absolutely exploded, going up from a penny all the way to 8 pennies in just a day. The question is, can Dogecoin sustain this pump? Today, I'm going to give you everything you need to know about Doge. I'm even going to be giving you guys a tutorial on how to buy it along with a massive price prediction you're definitely going to want to see. Let's get it. Doge style. BitSwap is the hottest new way to trade tokens. Crawling all the top decentralized exchanges, BitSwap gets you the very best price and value for your trades. BitSwap is changing the game. Try it now at bitswapdex.io. Welcome to BitBoy Crypto. My name is Ben. Every day on this channel, I show you how to make money in cryptocurrency. If you like money and crypto, then make sure to hit that subscribe button and smash the like button. This lets YouTube know you love Dogecoin. In today's video, we are going to be discussing Doge, and I'll do a quick tutorial on how to find where to buy it and then how to actually buy it. If that is something that interests you, I do suggest Binance.us for US citizens. You can get there by visiting bitcoin.com/deals and then scroll to the Binance section to get started. Today, we're going to be covering what Doge is, how to take profit from it, and where to buy it. So let's kick this thing into high gear with Doge. Probably the reason you're watching this video is because of the current Wall Street madness concerning Wall Street Bet, GameStop, Robinhood, and more. The strategy of the Wall Street Bet subreddit was to use stocks that were getting short squeezed due to downward selling action on dying companies such as GameStop, Tesla, Theaters, and Nokia. It's all being done by hedge funds. This is truly a time when the retail investor realized they could win this time. There's more of us than there are of them, basically. But then something happened. Trading app Robinhood became hedge fund and became president. In crypto, the new darling of these young modern retail investors is Dogecoin. The fund that was crypto. Started by a couple of what we would consider to be a blue chip cryptocurrency. See, it was created back in 2013 by Jackson Palmer as a meme coin. It was a reaction to the early explosion of altcoins. An altcoin is, of course, for those people who don't know, any coin that is not Bitcoin or crypto. Jackson Palmer would leave Dogecoin, it has nothing to do with it really anymore. Pops up time to time making political commentary. But Doge became a coin of the people very early on. Doge is the fun coin in crypto, while many of the other projects like to keep professional profiles. Dogecoin certainly enjoyed a big run in 2017 when altcoins exploded for the first time. But its highest profile event was Elon Musk calling himself the CEO of Doge. Twitter bio back in 2019, posting that it was his favorite cryptocurrency. He continued following up on it intermittently in 2020, calling Dogecoin the standard. Basically, a meme of a meme. You can think of it as crypto meme section. But the insane price action we've seen in the last 48 hours, it's not because cryptocurrency in general is blowing up. We were actually in the doldrums of the Bitcoin bull. While Bitcoin has no way. To go to $1, the market cap would need to reach $128 billion for Dogecoin, which is about 80%-ish of the cap of Ethereum, the number 2 crypto. Could it get there? I mean, at this rate, it would need to get almost to 25x. But getting above $1 is going to be a big problem. So what does this mean for you? Well, you need to be taking profit off the table as the price increases. I bought some yesterday where all the madness began, and I took some profits off the table once it went up around 150%. I withdrew my original investment and some profit on top of that. Crypto, we call that remaining amount a moon bag. When the price hit 6 cents, took some more profits, but I still have a big chunk remaining. You guys will see how much Dogecoin I own when we do this tutorial in a few minutes. But here's the point. Don't be duped into thinking Doge will go up forever, because it won't. Nothing does. Even the crazy stock market bull run that's gone on for over 10 years now is going to end, maybe sooner rather than later. This could actually be the catalyst. You need to be taking profits off the table as the price goes up.
Take this one.
From the peak to where it is at the time of this writing, it's already fallen about 30%, and it could fall more. So make sure to lock in those profits as you go. Also, what should you be doing with those profits? Well, you can, of course, cash. I would say cash will most likely continue losing value as well due to inflation and reckless stimulus money printing. So the optimal strategy would be to reinvest some of the profits in other cryptocurrencies such as Ethereum, Chainlink, Cardano, and Aave. These are can't-miss projects, and many of them have yet to find their explosion points. The question is, though, how high can Dogecoin go? The fact is, it's already melted our faces. But as Bitcoin continues to rise, profits will flow down to other coins, all the notoriety Dogecoin receives. It is in the realm of possibility it can reach $1. But I believe the most realistic target for Moon is 25 cents for Dogecoin. But driving the price is low. Okay, so let's show you how to buy Dogecoin. First, I'm going to show you guys how to figure out where to buy. What you do is you go to CoinGecko.com, search, and you find your asset. Come down here, Dogecoin's coming in at number 10, so we're going to click on Dogecoin, and it is going to take you to a place that looks like this. It's got information at the top. It shows you its rank, shows you the website, different information about it. Over here are the numbers, right? It shows you the market cap, the trading volume, the circulating supply. As you can see, it doesn't have a cap. That's what that little infinity symbol stands for. And these are kind of really important numbers. It shows you how much it is over the day and things like that. But if you come down here, you can look at the chart. You can click on the last 24 hours. You can see it topped out close to 8 cents before dropping back down. And then you can click markets right here. So it says overview, markets, chart, historical data. So we'll click markets. And this right here shows you all the exchanges where you can buy it. I know United States citizens are allowed to trade on Kraken. There are several other ones down here that you can trade on. But we want to go to Binance.us, which down here is ranked number 29. So this is where I'm going to show you guys how to buy it. So to get an account on Binance US, just head on over to bitboycrypto.com/deals. And then right here, you can actually just click Binance. It'll take you down. Sign up for Binance US to get the widest assortment of coins for US citizens. You click here. It's going to take you to the sign up page. Well, this took me straight to my account. So here we are. So we're on my account right now, and I'm going to be showing you guys how to buy Dogecoin. So what you're going to want to do is you're going to want to come up here to trade, and you are going to want to click markets. Now, obviously, I think this goes without saying, you're going to want to set up an account. You're going to want to get verified with them. It's available in 42 states. If it's not in your state, then you can go back to that list on CoinGecko and find a place like Kraken where you can trade it at. And
This is eToro, the leading social trading platform.
Hey, what's going on, guys, and welcome back to Stockwatch. My name is Harley, and in today's video we're talking about CCIV and the Lucid Motors merger. Now, this has sort of been swept under the carpet a little bit the last few days because of all of the GameStop and all the Robinhood news. So we're going to be talking about some more evidence or potential evidence that's been found, some more connections that people online have found between these two companies, and why it's looking like this deal is almost certain. So stick around. So guys, welcome back to the channel. Now do me a favor, hit that big old thumbs up button. It's completely free and really helps me out. And if you are new around here and you like what you see and you vibe with me and you want to see more, consider subscribing because we'd love to have you here. Now, let's quickly go through the 5-day chart for CCIV. Now keep in mind there's no real technicals around this. It's just the technicals sort of indicate good opportunities to buy the dip and stuff like that. However, I'm not going to go too deep into any technicals. I'm just going to go through what price action happened this week. Of course, we opened at 26.77 on Monday, and we have sold off a significant amount, 14.5%. We were up on Friday. We recovered some of those losses. We were all the way down to about $20, about 24%. So we did recapture some of our gains on Friday, and in the after hours, we are up a little bit. And all this price action, of course, has to do with the drama that's going on this week. And one little thing that I want to point out, which is something to keep in mind and why we could see potentially no news of a merger in the immediate future. And this could all have to do with, the excitement that is, that won't be allowed by brokers like Robinhood. So let's jump over to this one quickly. So this was posted by Alex Cutler on Twitter. We've all heard about him if you're in the CCIV online space. Now, he posted this, and this is from, I'm not too sure if this is him trying to purchase, but this is from Robinhood. Someone tried to purchase CCIV stock. However, there was an error. This order will exceed the maximum allowed CCIV shares you can hold at this time. You currently have 3,200 shares purchased or pending, including this order, which exceeds the limit of 1 share. So Robinhood are pulling their dirty tricks that they've been pulling all week on CCIV. They are limiting the amount of shares people can buy. And the reason I'm bringing this up is because if Lucid and CCIV come out with an announcement before market opens on Monday, there's a lot of people that are going to be very angry with Robinhood, even more, that they weren't allowed to buy in. With all the due diligence that's been done, and a lot of people are almost certain this is a done deal, Robinhood have made a mistake here. They're not, this isn't being short squeezed, okay? This isn't a GameStop or it's not a, an AMC. What they're doing here is, say this person wanted to buy 3,200 shares, okay? And say the news comes through on Sunday night or something like that, and the market opens, and say we double from the price that we're up at the moment. So say this person tried to buy 3,200 shares. Well, they are missing out on doubling that money. Okay, so I don't want to do the math real quickly, but Robinhood is not giving them the opportunity to make this investment or take this risk, their own risk, because they are limiting. So instead of making, they're making $20 instead of being able to make a few hundred thousand. That's not good enough. So I just want to keep that in mind. If you are using Robinhood as your brokerage, then you're going to run into some troubles buying stocks that you want at the moment, because they seem to be trying to manipulate the market in all sorts of ways. Now, let's get back into, let's get off the topic of Robinhood, because they're making us all sick at the moment with their market manipulation and their illegal activities. So let's get into what these new connections are that people are starting to talk about with CCIV and Lucid Motors. So this next section of the video and all this sort of video content will be around this man here, Andrew Liveris, my man, who is also from Australia with some Greek heritage. And we know that he did speak at the FII on, throughout the week, which is run by the Public Investment Fund over in Saudi Arabia. We know their connections to Lucid, but just to catch people up if you're not too sure yet, Andrew Liveris is he's a chairman of the board of directors for Lucid Motors. He is also Churchill Capital, part of the operating partner. He's one of the operating partners. So he is on both boards, which is a big link in general. come over, talking about links, that's a nice little segue. We're over here on LinkedIn. This is Andrew Liveris's LinkedIn profile, okay? So Andrew Liveris was a former chairman of the Dow Chemical Company, okay? See this here. If we click through, you can see that it is Dow DuPont, okay? And now we come over here, keep that name in mind, because as we come over here to DuPont Capital, okay? You need to keep these guys in mind. DuPont Capital. Parent organization is DuPont, okay? And we click on that here. Their parent capital is DuPont, okay? We've got DuPont here. Same logo here. It's the same company. We know that. That's not up for debate. Now, how this all links in, and I'm probably simplifying it right down to try and make sure this video isn't like 30 minutes long, but what happens here is you can see as we come over here, we're on our friendly Twitter, our friendly DD site. Now, just keep in mind that I check all of this stuff after I see it. I'm not just like spitting all this out just to sort of have something to talk about. But so if we look at this here, what this guy's found, okay, a lot I found today, there is a connection between DuPont Capital Management, which bought today 4 million shares of CCIV. Now, to keep this in mind, this was actually purchased before January, so before the article came out. DuPont Capital, they filed their 13F filing for the period up to December 31. So they had bought these amount of shares before the news came from Bloomberg. But people are starting to question whether they knew something, whether they knew this deal was going down so that they could get in at the $10 cost. All of this is pointing to some pretty crazy things. I know a lot of people would say, nothing's proven, and that's completely true. We haven't had a definitive agreement, but all of these signs, man, they are pointing to something that is very difficult to ignore. And the last thing before I was going to finish recording and editing this video, this popped up. Our man Alex Cutler on Twitter, we know him. He has come with the goods once again. So he found this article. Actually, he has credited, who did he credit? Nick_Nolvisky for the find. Okay, so Nick Nolvisky on Twitter. Go check him out if you are on Twitter and you're a Twitter user. This article from Car Buzz. Lucid's incredible new paint shop will form heart of the brand. Okay, don't worry, that's not the news. Let's look at the article itself. Lucid is more than just a flash in the pan. This next sentence is going to get you. The company has just closed a $15 billion deal, and its new massive production facility is coming along nicely where the production is. Now, keep in mind, what's that number? What's the $15 billion deal? Well, remember what Bloomberg said. That was how much the merger deal was supposedly worth. And the thought is, okay, well, who are these guys? Maybe they're just using the information. Well, here's their Twitter, Carbuzz, carbuzz.com, and look who follows them. Damn. Okay. Well, all of this is starting to look a bit, I don't know, make your own judgment. But I'm feeling really confident about this. What I don't like is if something is announced and there's a bunch of people who are still on Robinhood for some reason that cannot purchase CCIV because of this market manipulation, then, look, if everyone jumps off Robinhood and everyone is serious about buying CCIV, then I can definitely see this thing really popping. However, if, for some reason, a lot of people that are interested in CCIV are still, unaware they can't buy more, then this could be a little bit difficult. Personally, I don't see it playing a massive role after this weekend because I think everyone that is involved in CCIV in regards to keeping up with it and that would hear the news, I think they will have realized they can't trade more than one share of CCIV on Robinhood. So I'm sure that they've gone to something like a SoFi or the Cash App or anything like that to make sure that they are unrestricted. So guys, that's what we have for you today. I know it was kind of all over.
My name is Tyler Devereaux. I'm inviting you to attend my brand new 2-hour live masterclass, and I'm about to show you what
Wall Street bets on Reddit, GameStop, AMC, short squeeze. A lot of this can be confusing if you don't know what's going on and you're not familiar with the situation. But a lot of you out there are asking, how can you get involved? Do you have to trade stocks? Do you have to be willing to risk your money and invest your money in the stock market to get involved? No, you don't have to. That's the simple answer. So in this video, we're going to go over 3 ways that you can get involved in this movement. because that's what it is by now, guys. It's a movement. It's a household name. Everybody's talking about it. You know, when your mom calls you up and say, "What's going on with this?" You know it's hit the mainstream and you know it's hit home. So in this video, we're going to talk about 3 different ways that you can get involved with this movement, with GameStop, AMC, and what's going on with Wall Street versus Main Street. Now, if that sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. We're going to grow our portfolios together, and we're going to grow together. Now, if you like the content on this channel, please don't forget to click that like button. If the subscribe button is still red, do me a favor, subscribe to the channel and become a bro, and let's grow together. All right, now, like I said, we're going to be talking about 3 different ways that you can get involved with this movement, because that's what it is by now. It's a battle between Wall Street and Main Street. I mean, when you turn on the news and you can see CEOs of major corporations and hedge fund managers and billionaires crying because, you know, they can't make a living now, that's what it's become. We've got billionaires on TV crying because they're feeling the squeeze, and they know that what they were doing was risky, and it's blowing up in their faces right now. So how do you become involved? How do you become a part of this? What can you do? Let's go over a couple different ways. Number 1, if you're not willing to invest yet, if you maybe don't have the funds to invest, or you're too young to invest, or whatever the reason is that you're not yet ready to invest, how can you get involved? Easiest thing you can do is share this video, share the word, join the Wall Street Bets Reddit. You know, get involved some way on social media. Just by getting the word out there and letting people know what is really going on is really going to help the situation, help the cause, and really drive this thing forward as a movement. Now, the next thing you can do is stop the spread of misinformation. You're gonna see CEOs going on TV, and you're gonna see brokerage firms saying that they're trying to help the retail investor, they're trying to limit volatility, and that they're on our side, right? Well, guys, it comes down to a battle for the dollars. Everybody wants the dollar. And of course, the big guys up top are gonna cheat to win, right? It's nature. It's how they got to the top in the first place, and they're going to stay there by any means necessary. So if they limit your brokerage account to say you can't buy shares in XYZ anymore, and specifically GME and AMC, right? You can't buy shares, you can only sell shares. Or we're going to close out your account right now because of the volatility and the liquidity that we have problems with, and whatever excuse they come up with, just know that it's them trying to win the battle. They feel the squeeze, they know they're going to lose out, and it's starting to haunt them. Now, what am I talking about here? Maybe you're brand new to this, you're not involved in investing, you're not, up to date on what's happening in the stock market. You've seen memes, you've seen different videos, you've seen a lot of funny stuff on the internet already, but you're not exactly sure what's going on, because a lot of the stuff you've seen is people making fun of the situation, right? We're going to the moon. We're going to drive this stock price to the moon. It's kind of like, what does that mean? Is it just something silly that's happening right now? Are the stock prices going up for no reason? What's going on? So first, you need to understand what shorting a stock means before you can understand what a short squeeze is. So when you short a position, you're essentially selling that position high in hopes to buy it back at a lower price later. Now, normally when you think about the stock market, you think about buying a stock low and then selling it high later. Well, shorting a position is the exact opposite of buying a position or being bullish on a position. You're going to sell the position high in hopes that you can buy it back low later. And this is exactly what the big hedge funds, the institutions, and big banks were doing. They were going out, and companies like GameStop and AMC, they were betting that these companies were going to fail, and they were betting on this at such a high rate that they actually shorted more positions that were really available to be bought. So what does this look like? Big hedge funds, big corporations, the institutions, let's say, went out and they shorted this stock, expecting it to go lower, and really having the buying power and the money behind them to drive this price so low that it causes them to fall and causes the stock price.
So it's it's a great business to have. So you're looking at 30,000, 40,000 a month.
Hello and welcome to another TLDR US video. In 2021, it's hard to believe that a brick and mortar game store would see its stock prices rise even during a pandemic when people are trying not to go outside. It's possibly even harder to believe that this huge spike in stock price will be driven almost entirely by a Reddit community. So in this video, we're going to explain how Wall Street bets broke the stock market, and in some ways, prove the experts wrong. If you're one of these people who's watching but not subbed yet, then please consider subscribing to the channel to get more updates on US news and politics. Also, if you're interested in news around the world, then check out the new TLDR Global channel, where we're going to discuss a whole bunch of international issues. The link to that's in the description. Before we get into this, a quick disclaimer. We're not going to be able to explain all of this in super fine detail, so before you leave an angry comment about how we didn't explain what a margin call is, or the precise details of GameStop's third quarter earnings report, then just be aware that we're doing it in as much detail as we can. So where do we start? Well, there's basically three things you need to understand to get this story. The subreddit Wall Street Bets, GameStop, and a basic understanding of the stock market. If you use Reddit, you've probably seen the occasional post on your front page from the subreddit Wall Street Bets. Basically, Wall Street Bets, or WSB, is a subreddit about investing in the stock market. It started off pretty niche, but now has about 2 million subscribers. I don't think the WSB community would mind me saying this, so I'll say it, but it's a bit of an insane community. Not in a bad or a good way necessarily, it's just full of edgy memes and confusing lingo. GameStop is a company in the US that sells video games, and that's about all you need to know about it. And finally, the stock market. The main thing you need to understand here is what shorting is. Shorting is when you think a company is going to do badly. So you borrow that company's stock from a broker and promise to pay them back later. To use a non-stock market example, imagine that I thought that apples were going to go down in value. Let's say they currently cost $1. I go to a shopkeeper and say, hey, can I borrow an apple off you? I'll pay you back an apple later. I borrow the apple from him and sell it to someone for $1, and then wait for the price to change. If the price goes down to say 50 cents, then I can buy a new apple for 50 cents and return it to the shopkeeper. He's got his apple back and I've made 50 cents. In stock market terms, I would have shorted apples. Now replace those apples with stocks and you hopefully get the idea. There's two other things worth mentioning about short positions. First, you have to pay an interest rate on your short positions, because after all, you're borrowing something. Second, short interest can be greater than 100% of available stock. For example, imagine we've only got one apple. I could borrow that apple from my shopkeeper and sell it to another shopkeeper. Then someone could come along and borrow that apple off the other shopkeeper and sell it back to mine. Now we're back where we started, with one apple in the hands of my shopkeeper, but 2 apples owed to the shopkeepers. Alright, that's enough detail for the moment. Let's start this story in 2020. GameStop is a brick and mortar video game company. After the coronavirus hits, GameStop unsurprisingly has a couple of bad months and revenue falls. And at the same time, GameStop's stock price falls to about $4 a share. Now, largely because of this, there's a lot of big international investors that thought GameStop was essentially going to go bust and do a blockbuster. So they shorted GameStop's stock, hoping to see it collapse. However, what they didn't see was that there was some good news coming GameStop's way. Firstly, in mid-August, Ryan Cohen, the founder of Chewy, started buying shares in GameStop. By December, VC Ventures, Cohen's company, had bought about 9 million shares, so 13% of GameStop. Then, in January, Cohen, the founder of Chewy, Alan Attal, the previous COO and CMO of Chewy, and Jim Grube, the previous CFO of Chewy, were all appointed to GameStop's board. Basically, it looks like Cohen has decided to get involved with GameStop. And as a billionaire who made most of his money from Chewy, an online pet food retailer, it looks like GameStop have a big advantage. They've got a billionaire investor who's experienced with running e-commerce companies, which is exactly the business model GameStop needs to shift to. Secondly, in November, the PS5 and Xbox Series X were released, marking the beginning of a new console cycle, which is always good news for GameStop. Thirdly, GameStop signed a deal with Microsoft, which gave them a share of all of Xbox's digital revenues. So, good business news for GameStop, but what about the stock? Well, over this period, it seems that two important things happened. Firstly, the institutions that had shorted GameStop stock decided to buy up more short positions to try and defend their original shorts. Basically, they saw that things were on the up for GameStop, so to try and suppress the stock price, they actively shorted more. This chart seems to show, for example, that on January 11th, there are a massive 4 million short positions taken, despite the fact that this was the day that Cohen's board appointments were announced. Anyway, in total, there were 71 million short positions taken. Now, GameStop only has a float of 69.75 million shares. Remember, you can have more short positions than actual shares total. But it gets crazier, because about 20% of GameStop shares are held by insiders like Cohen. Now, insiders can't sell easily because of regulations, so those shares aren't normally up for grabs. There's also about the same amount again owned by big institutions who don't normally actively trade either. So that leaves between 20 and 30 million actively traded stocks and 71 million short positions who all need to buy stock. That's a lot of demand and not much supply. Anyway, Wall Street Bets realised this and determined that if they bought the stock and held it, they could force the price up.
With Fundrise, the same kind of real estate investments that have powered the world's strongest portfolios for decades.
This triggers what's known as a short squeeze, where people with short positions desperately buy into a stock and try to cover before the price gets too high. They're trying to buy up apples to return to shopkeepers before the price gets even higher. These people are losing money, but covering now prevents them from losing even more. But when there aren't enough stocks to go round, this forces the price to jump spectacularly. And remember, it costs money to short a position forever because of interest, so they want to act fast. And this is exactly what happened with Volkswagen in 2008, where it briefly became the world's most expensive company. And so that's exactly what GameStop investors did again. GME's stock went up from $5 in September to $20 in December to $40 in mid-January to a ridiculous $150 peak yesterday. Ultimately, people on Reddit made a lot of money and short sellers lost big. Two big names in
GameStop and AMC are probably the most impressive things I've ever seen when it comes to investing. They're definitely the most exciting.
Hi everyone, StockMo here. Today's video is for entertainment purposes only. Today we're going to be going over the portfolios. I had a couple of things yesterday I wanted to talk about, but unfortunately I was a little bit under the weather. I'm feeling better now, but I missed out on giving an update on Friday and just what was going on. So we're going to cover the portfolios. We had some new trades in the penny stock portfolio, and I do have the new poll out of the 5 good gambling stocks / some esports stocks. I put them out there. We'll take a look, and I'll update it for the first time to see which one is in the lead right here on the channel. So stick around. I think you're going to like what I got for you. If you put in $100, you get 4 free stocks worth up to 30. A lot of people are getting guaranteed $21, possibly all the way up to $3,700. And so now I do have a link down there to Patreon, which is the way you can support me as a YouTuber. I put all my portfolios over there. We have a private Discord. I just did this a little bit ago, so when I update this, we can see together which one it's going to be. Personally, I own Skills, I own RSI and DKNG. I do not own Penn, but I like it, and Golden Nugget Online Gaming, I own that as well. I would probably say out of these, I know Skills is not really a gambling stock, but more of a tournament, but I lumped it in all together because it's competition, all that good stuff. So we're going to just see which one of these goes. I'm going to guess it's going to be between these two, and let's go ahead and take a look and see what comes up. And it is between those two. No, Golden Nugget Online's in first place. I thought it was.
Meet Chris and Mark. They've both heard of Bitcoin and Ethereum. While Chris is using
What's up guys, I'm Mike from Stocked Up. In this video, we're going to be talking about why next week will be one of the most influential weeks in stock market history. By now, I'm sure you're already familiar with what's going on with GME and AMC and NOK and BB and all of these other hype stocks, but I think a lot of people are overlooking a lot of aspects of this catalyst. In this video, we're going to be talking about obviously why the stock market will be going crazy next week, but whether you're someone who thinks GameStop is going to $1,000 next week or $10 next week, I think there's a lot of value to be gained from this video. So let's get right into it. Ever since the stock market was created, the wealthiest investors, the wealthiest funds, firms, and institutions had all of the power. And today, more than ever, there are so many shady things that go on behind the scenes in the stock market. There's so much manipulation and a bunch of different ways these billionaires rig the game in their favor. But this past week kind of changed that. So we've never really seen a short squeeze to this magnitude. I mean, GameStop literally went from about $19 to $483 in a couple weeks, and billionaires were short billions of dollars worth of this stock, and they got squeezed big time. There was a report by Reuters saying that overall, year to date, shorts of U.S. companies lost about $70 billion. That is insane. And obviously by now, I'm sure you've seen all over the news and Twitter and even TikTok and Instagram, like everyone is talking about this situation. And I think next week is going to be such a defining moment. This week, there were a lot of shady things that went on, especially with GameStop, AMC, and NOK. There were a ton of halts in the trading day with GME, and it really just killed off that momentum. Like we could see multiple times throughout the trading day, it looked like GameStop and these other stocks had potential to continue higher, but then they got halted and the momentum just got killed. And then also, I'm sure you've heard by now, but brokers and clearing corporations were literally restricting people from buying GameStop, AMC, NOK, and a lot of other stocks. Like, in my opinion, that is complete BS. You should be able to trade whatever you want to trade, whether it's a risky decision or a safe decision or whatever. Like, I don't think it's right that brokers and clearing corporations are literally restricting what you can and can't buy. And there's just a lot of shady things going on that we don't even know, like with this situation. And I think if we can see GameStop continue to go up, I think that's going to be a huge win for retail traders. And it's going to kind of put billionaires in their place. Like if GameStop continues to go up, the losses that billionaires and these firms and institutions face will be massive. And I think that will really just kind of send a message to billionaires, like saying, you know, you can't get greedy, like you can't get too greedy, because if you guys don't know already, GameStop actually had more shares short than it did in its entire float. So basically there were more shares short of GameStop that actually even existed. So basically billionaires got way too greedy and they shorted GameStop so much. Once it started to run up, we saw a giant squeeze, which is what we're seeing now. But if GameStop kind of gets rejected and loses momentum, I think that'll just prove to us saying that, you know, billionaires once again screwed the little guy over and screwed retail traders over. So really, I'm just really going to be watching GameStop next week. I don't have any positions in it. I'm completely neutral. I mean, it's such a crazy, tricky situation. Like we've never seen anything like this before. Obviously, I'm rooting for the retail traders because there are so many different ways that hedge funds and institutions screw us over on a day-to-day basis. So obviously, the market is extremely crazy and tricky right now. And I think the most important thing is to protect your capital. Don't risk anything you're not willing to lose. The market is extremely risky, volatile right now, especially with these hype stocks. I would say the best thing to do would be to sit on the sidelines. Obviously, next week is going to be historic, and I'm just excited to see what ends up happening with these hype stocks. There's more than enough momentum with them right now. And I think the biggest things, if we're going to see these billionaires and institutions continue to manipulate the markets. And obviously we know that there's a lot of shady things going on right now, but I'm just curious to see if these institutions will be held accountable for their actions. You know, there's so much manipulation on Wall Street, and I'm really hoping for a short squeeze, even though I don't have any shares of GameStop. You know, it's just to show that, you know, retail traders are kind of starting to fight back, and that would be an awesome sight to see, in my opinion. Like I said, I don't have any GameStop shares at all, and I'm completely neutral on it, but I just like the situation overall more than just what's going on with the stock. I like how retail traders are finally fighting back against these giant institutions that have just been screwing people over for so long. So if you guys like this video or gain some value from it, hit that subscribe button. I post brand new videos every single day, and let me know in the comments what you think is going to happen with these stocks. I'm very curious to hear your guys' thoughts, but other than that, thanks for watching.
Making a decision on if it's a bullish, bearish position. They kind of look at price, but they don't look at it this way, because I could construct a similar position where it's positive vega. So let's say we've got something like this by a calendar, okay, and this position, and let's go probably about 6 or contracts here as well, and let's see if I could line it up to about that same strike. There you go, positive delta, okay, positive theta, and a positive vega. Okay, is it bullish, bearish, or neutral? I'm right in the middle.